Hey everyone, and welcome back to the channel where we demystify the complex world of market mechanics and uncover intriguing stock situations. Today, we're diving deep into a fascinating case of a hard-to-borrow stock that's been lighting up our screeners, Decent Holding Inc., trading under the ticker DXST. This isn't just about general market theory, we're looking at real numbers right now for a very specific company. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, let's talk about DXST, Decent Holding Inc. This company operates in the industrial sector, specifically within waste management, providing industrial wastewater treatment services in the People's Republic of China. Beyond wastewater, they're involved in ecological river restoration and even produce microbial products for things like COD decreasing and algae removal. It's a niche but important sector. Currently, Decent Holding Inc. carries a small market capitalization of about $5.01 million. Let's look at its recent price action. Should chart DXST price action today. DXST saw a slight dip of 0.43%. Over the last 5 trading days, it's actually shown some strength, up plus 10.10%. However, if we zoom out to the last 30 days, DXST is down by minus 26.84%. This recent volatility sets the stage for why it's appearing on our hard-to-borrow radar. What is cost to borrow and why it matters? Before we get into DXST specific numbers, let's quickly explain what cost to borrow or CTB is. When a short seller wants to bet against a stock, they first have to borrow shares from another investor or brokerage. This isn't free. The cost to borrow is an annualized interest rate, a fee that short sellers pay for the privilege of holding those borrowed shares. Highlight CTB as if you think of it like a loan interest rate. If a stock has a CTB of 100%, it means the short seller is effectively paying 100% of the stock's value per year just to maintain their short position. It's why you see these numbers often exceed 100% annually. It compounds daily. A high cost to borrow signals that shares are in high demand to be shorted, or, more importantly, that they are becoming extremely scarce. Why the stock is hard to borrow right now. Now, let's look at why DXST is so interesting. Show CTB data on screen. Our screeners flag Decent Holding Inc. with an incredible cost to borrow fee of 590.2% annualized. Highlight 590.2%. That's nearly 6 times the stock's value per year for short sellers. What's more, this isn't a stagnant number. The CTB momentum has surged by an astounding plus 212 percentage points just over the last 5 trading days. This indicates rapidly increasing demand or shrinking supply. And speaking of supply, there are currently only 15,000 shares available to borrow for DXST. Highlight 15,000 available shares. Contrast that with its estimated float of 1.2 million shares. A mere 15,000 shares available out of 1.2 million, combined with that explosive CTB, means DXST is exceptionally hard to borrow right now. Our internal composite squeeze score for DXST, which combines CTB level, momentum, borrow supply, float size, and technicals, currently stands at a notable 55.8 out of 100. Squeeze mechanics explained. So, what does it mean when a stock is hard to borrow with such a high CTB? It means the conditions for a short squeeze are potentially ripening. Here's how it works. Short sellers borrow shares, sell them, hoping the price drops so that they can buy them back cheaper later and profit. But if the price starts to rise, they are losing money on their position and they are paying that exorbitant 590.2% annualized fee daily. Illustrate losses. If there are very few shares left to borrow, and the price starts ticking up, short sellers might be forced to buy back shares to close their positions. This buying to cover their shorts creates buying pressure, which pushes the stock price even higher, trapping more short sellers, forcing even more covering, and creating a feedback loop. That's a short squeeze. However, it's critical to remember that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have incredibly strong conviction in their bearish thesis, and they are willing to pay a premium to maintain that position. Dilution risk check. One of the biggest threats to any potential short squeeze is dilution. If a company issues new shares, it increases the total float, potentially providing more shares for short sellers to cover with, thus easing the squeeze pressure. It also dilutes the value of existing shares. For DXST, we've conducted our dilution risk check. We found no recent diluted SEC filings like SMINUS 1s, SMINUS 3s, or 424Bs in the last 90 days. Highlight no dilution. This is a positive sign for any potential squeeze thesis, as it suggests the company isn't currently flooding the market with new shares. Additionally, we found no recent reverse split for DXST in our look-back window, which is another factor that can sometimes disrupt a trading thesis. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given DXST's unique situation, what should you be watching for? First, volume. Show volume data. Today's volume for DXST was 80,500 shares, which is significantly lower than its 30-day average volume of 1,323,453 shares, a relative volume of only 0.1 x. For a squeeze to ignite, you typically need a surge in volume to fuel that buying pressure. Keep an eye on the borrow desk data. Does the 15,000 shares available to borrow shrink further, or does the cost to borrow continue to climb? Any sudden increase in buying interest on relatively low volume, especially with such a high CTB, could quickly escalate into a volatile situation. Remember, small flow stocks like DXST can be extremely volatile due to their limited supply. Decent Holding Inc., DXST, presents a compelling case study in a hard-to-borrow stock right now. With its astronomical 590.2% cost to borrow, rapidly increasing CTB momentum, and extremely limited shares available to borrow, it certainly has the classic ingredients for a potential short squeeze scenario. But as always, this is highly speculative and subject to significant risk. Understanding the mechanics is key, and the data on DXST offers a fantastic real-world example. If you found this breakdown insightful, make sure to hit that like button, subscribe for more deep dives into unique market situations, and let us know in the comments what other hard-to-borrow stocks you're watching. We love hearing from you. Thanks for tuning in, and we'll see you in the next video.